It's Wednesday again. Let's take a look at some DeFi charts for Brave New Coin. We'll start with dominance, which looks like it's trying to bottom out at a historic 40% level. To most people who truly understand crypto, dominance isn't really anything that's mega important because you can easily just create stuff out of thin air and it's going to change the denominator of this equation. And that's always something worth keeping in mind. The other thing about this is in a bear market, alts overperform, and in a bull market, alts overperform. Meaning, if the entire market goes bearish, alts will get slammed 90%, whereas BTC will get slammed 50 to 60%, over a period of time. And we saw that just the other day with the capitulation where BTC moved 40 to 50% from highs and alts moved 75% from highs, right? So keep that in mind when you're looking at stuff like this, thinking, I don't know what people think about dominance. I guess they're hoping if they're holding alts that dominance goes to zero. I don't know. They're hoping that everything flippens everything else. I don't think it's directly tradable. It's better to use it as a sentiment indicator, a sentiment gauge. So unless things drastically change for Bitcoin specifically, which may happen with this Latin America news, I'd expect dominance to just remain sub 50% kind of for the duration, until the alts get washed out. You got to understand, Dogecoin is still at a $50 billion market cap. It is nothing, meaningless garbage, okay? So that's going to affect dominance. So keep that in mind. If we look at the DeFi perp index, something that's deeply important to me as I trade the DeFi portfolio. Every day I wake up, I have this on my 4 panels on my monitor. I am watching it like a hawk because if this breaks lows, this is an index, as in many DeFi things are in this, okay? If this breaks lows a second time, then that's bearish trend confirmation. Here we just had the reversal, right? This is bearish trend reversal, potentially arguably neutral territory, right? Which is one reason why I haven't fire saled everything on that portfolio yet. There's still a chance that we actually come out. I'm not Canadian, but that came out Canadian. That we come out of this in a bullish fashion. It's potentially the case that we make higher highs beyond 11K, 12K on this index and have another run. It looked like we had plenty of consolidation action between February to May to justify an additional run. That got smashed down handedly across, that was market wide, right? DeFi liquidations, whatever that was last week or the week before. But now comes, is this going to be a slow bleed march down like it was in the inverse direction in January? I mean, we could easily have a Q3 where we just see this, right? We just see a diagonal straight to zero for all these DeFi charts, including the index, right? Because we did not see any large consolidations on the way up. On every single chart I'm looking at, I'm about to show you, this is generally the case. If support breaks, the next support down is significantly lower, 80% lower, 70% lower, right? The question is, do you want to hold that? Do you want to buy those knives? Do you want to sit through that? As a portfolio, I don't want to sit through that, okay? I would much rather wait till it's back down here, have some sort of consolidation, bearish momentum over. We are just gearing up for the potential, okay? I don't want to scare people, but this is what's going through my head. We just crossed a 12-hour 5,200 cross for the first time since November, right? Like, if we're going to be bearish, now's the time. Volume's gone to zero, gas to zero. There's 3 or 4 VCs that are trading DeFi, providing liquidity, right? For the most part, retail got liquidated. There's potential regulations coming for DeFi as it gets bigger, at least in the US. This is all the stuff that's part of the decision tree that goes in my head here. Like, why am I not adding to positions, or why am I not cutting positions on the DeFi portfolio? Because we still have a chance, It's probably 45, 55 that we move up. We looked really good until a few days ago. We had this ascending triangle. It looked like ETH wanted to pull the entire market up with it, including BTC. Then we had that FBI FUD / news regarding the dark side ransomware recovery, and the market did not like that. Now few days ago, we had this, yesterday, whatever it is, this El Salvador news, right, for BTC. And all of a sudden we're bullish again on everything sentiment wise. So it is highly bipolar right now, which is why I'm just looking at this chart. If we break lows, that's it. What I will be doing is cutting those positions in DeFi land. Something else to watch, a bellwether, is this Link pitchfork, which goes back pre-2019 and gives you a rate of change for trend. If we break below this for the first time, right, if we close below this, even here, we barely squeaked by in early 2020, and this was Corona March, right? Link did actually pretty decently in Corona March. It didn't even break any mega massive low. So if we start to break lows here, that's it. This is highly at risk for that. If we break below 2018, I'm not going to be a hero. I'm not going to be a community member. I'm not here to stick around and watch this stuff slowly bleed to sub 5, sub 7, whatever. I can be bullish on all of crypto and DeFi, but be realistic and see what I'm seeing, right? And that's important to like separate in your head. I'm bullish on crypto, and then here's the reality, here's what's happening right now. Some of this stuff is in a multi-year bull market, bull trend, and it's just kind of time at this point for Link. Here is the half-year MA multiplier in the buy zone. Historically hasn't spent too much time down here and didn't even tap the sell zone, and currently above 140 on the half-year MA. On the 1 year MA, also didn't tap the sell zone, couldn't really make it over the midline, and is approaching buy zone down here. So if I'm a long-term holder, what I don't want to do is sell below 17, right? Because historically, this indicator is telling me below this 1 year MA, much like this pitchfork, right? This is a buy zone, not a sell zone. But if we start to break below that continuously, what are you going to do? Are you going to keep adding? You have to make sure you're ready for that. Are you ready for lows to continue dipping if you keep adding at Link, at 220, right? Let's say you add Link at AAVE. You add AAVE at 220. It goes to 140. What do you do? It goes to 90. What do you do? It goes to 55. What do you do? Do you just keep adding, right? As long as you know what you're doing, it's your portfolio, it's your trade, whatever, right? As long as you're prepared for that, that's really all you can do, Daily AAVE below the cloud, almost below the 200, the red line here, very close to a bearish 5200 cross. So once that happens, there's very little justification on technicals to hold this anymore. It's been bullish since 2019, October 2019, right? This is what it looks like when you want to get in, and you either buy support, watch it go higher, or you watch support slip and sell. I mean, that's the name of the game. Historically, it has not broken this 200-day moving average for a significant period of time since October 2019. But there's a lot of hopium up here if this all of a sudden breaks significantly below, right? Like this wants to go back to 90, honestly. This wants to go back to sub 100. And let's say it does, you don't want to be in a position where you can't buy those lows, right? You want to be in the position where you're ready for that sort of price action with open arms, ready to bid that. That's what, in my mind, where I want to be. So it's much easier for me to be in cash, waiting for the fire sale bottoms, right? The people capitulating sub 100 on AAVE, than to just be holding it from 330 to 100. Maker, same thing. I'm incredibly bullish on Maker, but if it starts to break below the 200-day moving average, then it's in trouble. Currently, it's below the cloud, although the cloud and even all these moving averages haven't really performed super well. You could argue that Maker's been bullish since July 2020 with this cross. Previously, it was kind of mixed, but Maker could go back to 750, right? Like that is the previous support of the breakout. Anything that's broken out since January can easily retrace to that breakout point again, right? We can just Eiffel Tower all the way back down. I think it's important for people to be open to that possibility. What I don't want people to do is watch this video and then have some awareness of my analysis or anyone's analysis and think, okay, everything's going to be fine. Everything's going to be fine. Everything's going to be fine when uni goes to 18 to 14 to 11, right? As long as you're informed, it's all people can do, right? And if you make that trading decision, that's up to you. Uni, though, looks okay relative to everything else on the 12-hour, broke out in January. and is setting up for some sort of Adam and Eve type of bullish reversal. Anything above a 30 and we're game on for a uni. Uni is probably another one to watch closely with alerts, because if uni starts to perform well, generally that means across the board DeFi is starting to look better and better. Now let's say some sort of regulatory thing comes down the pipeline, because that seems to be the season. It's regulatory season. It's 3-letter alphabet soup season. Everybody and their mother wants to comment on crypto right now. And any regulatory actions against DeFi will hurt the biggest players likely the most, including uni. Regardless of this is domiciled wherever, I don't care, right? It doesn't matter. It's going to hurt DeFi collectively. Sushi looks worse than uni does, certainly farther below the cloud, farther below that 200 period moving average, threatening some sort of Adam and Eve inverted chart pattern. And I really don't want to stick around in this trade for sub 550, sub 4, sub 320, right? Because on technicals, that's where it could go. No matter how bullish I am on the exchange and multi-chain and dexes and whatever, this is where this could go. And this is where people become community members on the way down. For Sushi, anything above 15 would probably be in the clear. That would be above the 200 period moving average here on the 8-hour and above the cloud on the 8-hour. But it's teetering, right? It's cliffing significantly. 1 inch actually started to do pretty well. 1 inch's breakpoint for bullishness is probably $4 and above, and looks like most of the support is around 160, 190. There's less chart history here. There's less downside potentially than everything else. Maybe not percentage wise, but 1 inch looks halfway decent. SNX is in trouble as well. It's continually pushing lows below the cloud. Bearish 5200 cross coming here soon. It does have a bull div on RSI and volume, but it really needs to start pulling up, because this will be the lowest point below the 200 period moving average since October 2020. And it just, it's no longer bullish, right? Trend is no longer bullish. If you want to buy those knives, more power to you. But the dynamic here is we're going to go searching for support, not we're going to start punching through resistance, okay? That's just what the technicals show me here. Curve, one of the better looking charts. They've had some fundamental changes for some of this bullishness here. Also important to note that they basically flatlined since late January. From January to May, they did basically nothing and then dumped like 75% in a week. And it's basically back, curve is basically back into the previous range at this point. For curve, anything above $3 would be incredibly bullish, and anything above $4 probably means the entire ecosystem is ready for bullish reversal in a strong fashion. Tons of support down here, 55 cents or whatever, but curve on balance looks like one of the better ones. Comp reminds me of SNX, where it's got this falling wedge, bull div starting here, bull div on volume, bull div on RSI. The problem is lower lows here are 150, 200, that range. So if you're prepared to stick around for those lows, great, right? If you don't want to take another 50% plus hit, then if we start breaking lows, the decision is simple. I'm out. That's it for me, because the support for this stuff is all the way down here. And the other reason for that is there just isn't a lot of chart history, right? All this stuff is new and basically has been bullish since January. And now it's deciding whether or not it has a significant future in the near term, which it doesn't. Most of these charts don't look like they do. ZRX kind of has 3 modes post 2018, where it had this bullish consolidation doldrums and then lifted off in January. So now it's between these 3 areas. You can see the volume here as well. So this looks like easily 50% down move from here if we start to break lows. If we start to see something above $1.50, then it's probably okay. But where it sits here, it's just a tangled mess of in between a bunch of levels. Unlike a lot of the other DeFi stuff, ZRX has had pretty significant trading history. So there are some levels here on the way down, at least for support. Melon, which recently got listed on Coinbase, it's Enzyme, the non-custodial portfolio management tool. Lots of trading history on Kraken, and it threatened a significant bearish move, bounced heavily with probably some insider info on that Melon news into Coinbase. And then the Coinbase news was immediately a sell the news event, because anybody who knew about that ahead of time, which it looks like there was a significant number of people who did, then, they're selling into the people buying on that news who didn't already know. So this still looks bullish, still looks fine. It's arguably been bullish on the daily since mid 2020. And I like support between 20 and 50. And if that doesn't hold, it's going sub 15, right? Like this is where all the volume is down here. There's really very little in the current 50% range to the downside relative to sub 15. Balancer, same thing as some of these other charts, SNX, falling wedge-ish, bull div on RSI, certainly. And Balancer does have some support here at 20, at 18.5, and below that 13, 14, 15, something like that. Balancer had this semi-ascending triangle, semi-rising wedge characteristic that it just couldn't push higher and sold off rather significantly. This is like Curve pre-breakout for Curve. That Curve had that fundamental news, like I said, pulled up to its 44 or 45 equivalent basically on the Balancer chart. So if things start to look bullish, I like a significant move, mean reversion to the upside, which is one of the reasons why I'm even holding anything in that DeFi portfolio. So it's definitely a wait and see, be ready to be terrified type situation. BNT also threatening a bearish 5200 cross with virtually no support volume until sub 220, sub 2, everything's down here. So keep that in mind. Ren is one I cut from the portfolio rather early because it just looked awful compared to everything else, with support around 30 cents, below that 10 cents, 5 cents. If things get truly ugly, Ren could easily go back to 5 cents, right? As long as you're realistic with with possibilities here, right? Like if I could set bids on this Enzyme app, I would do so for significantly lower lows to try to capture any sort of sell-off. There's a lot of coins. Liquidity gets rather slippery and poor when stuff starts to sell off. So my guess is for a lot of this stuff, we're going to see, if we do get lower lows, we're going to see some crazy lows on some of this stuff. On Binance, on Kraken, on Coinbase, too many exchanges, too many dexes, right? There just isn't enough liquidity when we sell off. So we're probably going for just ultra turbo mega lows quickly once that starts to happen. That's why when it starts to happen initially, you have to be ready to take action, because I just think this stuff is ready, all of it, just for another 50% move to the downside. UMA, it looked fine up here, got nuked, did not move up like Curve, and it's just kind of sitting in a range. Some support at 10, 8, but it doesn't look like anything I want to exactly purchase at the moment. Wi-Fi in the 12-hour had been setting up for this equilateral triangle, which post-drop is typically bearish continuation, and now it's sort of sitting above this cushion of historic volume. And if Wi-Fi pushes below 32K, it's in trouble, because that's where all of the volume is. So anybody who got in at these points starts to get nervous, starts to get underwater, starts to sell, right? They're break even or less at that point, regardless of what you think about Wi-Fi, whatever, right? It doesn't matter. None of that matters. Sorry, kids. None of it matters, because if it breaks 32, it's going to go to 21 or 25. If it breaks 25, it's going to 14, right? So if I was trading this isn't in the portfolio on Enzyme, but if it was, I'd be watching this extremely closely. Also, it has this inverted Adam and Eve characteristic that looks not so hot. So once again, Enzyme Finance is the Enzyme.Finance is the name of the website, where you can connect to a bunch of stuff, including number 2 is us here, and number 8 or 9 is us as well, and this is the DeFi portfolio. You can see everything for all of these funds: transparency, fees, performance, allocations. This is the ETH-BTC fund. You can see we have 5 million AUM. You can see where it's sitting. You can see all the deposits, the withdrawals, all the trades that I make that are done through dexes. If it ever looks like the trades I make are weird, it's because I can't do everything in one fell swoop unless it's moving to like AAVE USDC or providing more yield to something. Because at this point for this fund, and including some of the DeFi stuff, the sizes are getting to the point where I can't just market buy like 5 million in BTC, right? Or 5 million in ETH. I can't just do that without causing some slippage. So I have to do things in sort of like a piecemeal fashion sometimes if I want to get into a position with these dexes. Even though it does route through a bunch of stuff, including Paraswap, I can't just ape into stuff most of the time. This is the DeFi fund again, or the DeFi portfolio again. And you can always just watch what I'm doing, right? It's one thing to have analysis or have an analyst who does stuff, but also important for me to see what people are actually doing, right? Because I can say I'm bullish and I can say DeFi is the next best thing since sliced bread, but then on the other side of my mouth, I'll be selling everything, right? So you can see what I'm doing. I'm pretty honest, and if we start to get bearish across the board, you'll see exactly what I'm doing here in the portfolio. So that's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.